interest loans you can pay later. So that is what you have to consolidate. Suppose if you are getting lesser amount of interest rate loan, you can buy the loan and settle down this particular loan and make it a single loan, a bigger loan, instead of borrowing different person. 10 பேர் வந்து வீட்டில் நிற்கிறதுக்கு கடன் கொடுக்கணும்னு சொல்லிட்டு ஒருத்தன் வந்து நின்னா மேனேஜ் பண்ணிடலாம். 10 பேருக்கு பதில் சொல்ல முடியாது. That is what you have to consolidate your loans in general. Debt obligation need to be consolidated. So negotiate with the lenders for it. So this is the way you can manage your debt. Now investing long-term wealth. As I told you, you have to apply a rule here. 100 minus your age. Another rule for investment for long-term wealth. Suppose if you are in the age of 30, 100 minus 30, your age is 30, right? You have a longer life. You can earn more. So 100 minus 30, 70% of your income can be invested in stock market. Stock market in the sense it's not in the daily market. It is very risky. I am talking about a blue chip company which is high value price for long term purpose. Once if invested, you should not bother about that particular investment. You know, MRF tire is started with 10 rupees sir. Today what is the price of MRF sir, you know? What is the price of MRF sir?
2,000.
No?
14,000.
It is more than 1,75,000 per sir. 10 rupees only. If you invested 10 rupees on that particular day, Madras rubber factory, today you will become multi-millionaire. So that is what 70% you have to invest if you are in age 30. If you are age in 60, you can invest only 40%. Right? You try to understand that bonds is a secured investment. Government bonds or corporate bonds. These are all the things are minimal rate of interest they will provide, maybe 8% to 12%. So such kind of bonds, it's secured investment. They cannot say no. Stock market, there will be ups and downs, even if it is long term. Daily market is very volatile. You need to go for technical analysis, all the things, fundamental analysis. That is very risky for you if you doesn't know that. So now, there is another avenue, mutual funds. So these are all things are, it is high risk, stocks, mutual funds, medium risk, and the bonds, right, less risk. Real estate, very minimal risk. There is no much risk. So this is the way you have to, gold and real estate is a very, very minimal risk. So that is the way you can go for plan your investment. The 100 minus your age rule is applicable when you want to take high risk, where you want to invest in high risk stock or mutual funds. So these are all places you can invest. These are all things are called as high risk portfolio. Now protecting your income and assets. How do you protect your income and assets? Secure your financial future with adequate insurance. You have to take insurance for each and everything to protect your life. Health insurance. Suddenly something has happened. Today we don't know what kind of disease is come on the way to our life. So surprise disease will come. We have to spend huge amount of money for it. For that it is going to cover the medical expenses. Suddenly you need to pay 10 lakh rupees, 25 lakh rupees for a treatment in the sense which is very, very risky for us. We may not have enough money. That's what the reason if you are going to have a health insurance, right? So these are all things have been managed. That is what health insurance is one of the things is very important to manage or protect your income and assets. And life insurance. So entire life saving will be eroded if you don't have health insurance for one incident. That's what if you want to protect your income and savings, you need to have this kind of insurance. Minimal amount you are going to pay per annum and you are going to protect your life. Next, life insurance, which is going to provide financial security in long term for your dependent. You are taking life insurance, suddenly something has happened. Human life is not certain. So your kids should not be on the roadside. So for that, we are going to take life insurance. So the death benefit will be given to the kids. So life insurance is one of the security for dependents. And then professional indemnity insurance. Please try to understand that this is very, very mandatory. Suppose a family driver, I met with an accident. I hit one person. He died on the spot. The court is given the verdict to pay 10 lakh rupees. As a driver, I cannot pay. But if I have the insurance company will pay for me. That is what, even doctors may made a mistake. The patient may file a complaint. He may need to pay huge amount as a penalty. So in that particular time, you may not have money also. So such a kind of scenario, professional indemnity insurance will help you to enable to protect yourself. And then property insurance. This is another kind of insurance, cover home, clinic, damages or fire, theft, whatever it may be. Right? So if you have property insurance, you can escape from fire, unexpected fire damages. So all the things you can claim. So these are all ways you are able to protect your income, hard-earned income over the period. Otherwise, one accident will make you to become pauper. So next we move to the retirement planning, which is essential for retirement planning. Secure your golden years by estimating retirement expenses, like build your retirement corpus funds through early and consistent investment. Please try to understand that early investment is always better than later realization. So consider pension plan and annuities for regular income stream, like estimate your expenses. Accordingly, you can go for applying the rule and build the corpus funds. As I told you, 20% every year you have to save to build your corpus funds. And pension plan, you can go for, as I know that you all people might be, majority of the people may not be working in the government sector, you may be working in a private organization, you may have your own clinics, you don't have a pension. So you need to go for pension plan like NPS, National Pension Scheme, right, which will give the protection for your retirement life. How long we can go for clinical life. Again, it is very hectic, right? So certain point of time we don't want to continue for professional service also, we want to take rest. So during the time, this kind of pension plan will work out for you. Now, let us move to the pricing. So as I told you, pricing, I'm not going to calculate anything here. Normally, there are three types of pricing is applicable for dentistry. So any services, in general services industry. See, you are going to deliver a service which is contain a lot of investment for your equipment, your staff salary, everything need to be covered. So you have to find out the cost, how much you are incurring for providing that particular service. So plus cost plus pricing, that is called as cost plus pricing or markup pricing. You are going to mark up with your profit. The profitability for any business, please try to understand service industry, minimum 10% to 30%. You need to make a markup profitability to sustain in your business. So if you are getting less than 10%, there is no use of running that particular business. So minimum 10 to 30% you have to add with your costs. That is what cost plus pricing. And the cost plus your profit, that is called as markup pricing. Right? Now demand based. Now you may ask the question, shall I maintain only 30%, should not increase? Yeah, you can increase. Your pricing can be increased based on your demand. So you may be a high level professional. You are needed for the people in the sense there is much demand. There are so many people are lined up in the sense you can increase your price beyond your competitors because people are running behind you. You can extend any prices. Say for example, all people run behind Apple product. To be frank, if I want to say, Apple product does not have even a single manufacturing company. They don't have any manufacturing company. They are having only assembly unit. They buy all the components from China. China product is a low quality product. That is what all the people think. But Apple product component, majority of the component, 80% of the component used from China. But the quality standard is mentioned by Apple. This is what the quality we need. They ensure that quality is maintained. They assemble the product and they are selling. They build the brand name. Apple is the brand. We are ready to pay even 1 lakh rupees for it. But the cost of that equipment is not even 10,000. 90,000 you are paying extra because of brand. Say for example, one of my friend is having bunion industry at bunion company in Tirupur. He used to manufacture banian and he used to export. My classmate. He used to say, see Pandian, I used to manufacture the banian which is cost around 400 to 500 rupees. I am exporting a quality banian. The same banian is returned back to India with the brand name. It's one of the classic company. They are going to use that particular banian with their brand. When it is coming to the market, right, it's cost around 2,000 rupees for that brand. For that brand, they are charging 1,500 rupees. So if you build a brand, you can increase your price like anything. That is what demand and supply. Demand-based pricing. So if your demand is very high, you can increase your prices. Next, as you all know that when we go together for many time outside, we all see the roadside. There are so many dental clinics. My wife used to say that. Now petty shops are closed, dental shops are opening. High level competition everywhere. So in that case, you need to be in the business. Sustainable practice need to be there. If you are in the market, then only you are able to earn. If you are increasing your price, the other person is giving better quality, low price in the sense, all customer will go there. Patients will go there. One fine morning, you are not able to afford to pay even your rent. And you have to close down your clinic. There is no other alternative because high competition. So at that particular time, you have to compete with your competitor. What is the price he is charging? I am also charging the same price. I don't want to increase even single penny. So that is what it is based on competition pricing, right? So pricing is different based on the location and situation. So you need to understand that these three major pricing methodology we are applying. Apart from that, there are many pricing. These are all things that come under manufacturing industry like value pricing, target return pricing, going rate pricing, transfer pricing. If it is a manufacturing company, car manufacturing company, tire they manufacture themselves and the tire cost price only they transfer to the assembly unit. They will not add any profit. That is what is transfer pricing. So these are all things are obviously come under manufacturing company. Yet another pricing is there which is called as dynamic pricing. Earlier which is used only air tickets. You know that when the closer date will come, air ticket will go like skyrocket. Right? If you book well in advance, you can book the same place maybe 1,500, 2,000. If it is closer, the ticket cost may be 15,000. That is what is called as, it is based on the demand dynamic pricing. Now Government of India is imposing the dynamic pricing even in the railway also. Right? You look at that railway, you go and book the ticket, you are not able to get any ticket. So 400 rupees sleeper class ticket, you can go and book the ticket for 1,500, that also is not available. Then premier Tatkal you have to go, you have to pay 4,500 rupees. Same value. So that is what, same ticket, you are going huge amount of payment. That is dynamic pricing. Because more demand is there. That is why they are keep doing this kind of things. Now let us move to that. Finally, today modernization is very, very important. What are the tools you can apply for financial management? There are many tools that are available. If you go and look at in the galaxy of the digital world, you are able to see so many packages are available for income and expenses management. Like spending tracker, FI money, ET market, money view, Moneyfy, My Money, which is going to track your expenses, day-to-day expenses. All kind of apps are available. Some of the apps are available in free of cost also. Some of the apps are available with a meager payment. You can make use of this app and you can track your expenses. If you are not afford to buy Tally or Zoho or QuickBooks kind of softwares. Now let us move to the Zoho Books. You try to understand that it is one of the company which is established in Tamil Nadu. They are competing with global big Xian companies. Now Tally gone, right? So Zoho is one of the company as having accounting package which has become very popular now across the world with meager cost. And the advantage of Zoho when you compare with Tally is only offline operation. You cannot go for cloud computing. But Zoho you can use even your mobile. It can be operated anywhere at any time. Even from your mobile also you can access. Which is operated through cloud computing. Suppose if I don't TVLR, these are all apps. I am well aware MS Office. I know a little bit Excel. So you can prepare your own income expenses statement. I used to do my own expenditure like this only. I won't depend on anything else. So here income and expenses statement look like this only. What is the account and date, description, what kind of category of expenditure, and the income I'm going to put this column, and the expenses, money going out of your business, expenses will be recorded here. The balance amount is reflected here. So this I'm going to prepare a Excel sheet. So for that, we'll open an Excel sheet. I'll let you know.